The Iran crisis is taking over the world, and the world is taking the brunt of it. Prices of oil has shot up. Iran's largest natural gas plant is up in flames, and in retaliation, they vowed to destroy every single energy infrastructure tied to the US to be up in flames. And as I'm recording this video right now, Iran kept its promise by taking out Qatar's LNG plant, which is the biggest in the world, and it's currently up in flames. And all the investors are gonna feel it. So let me tell you what to do during these times of crisis and what this means for global investors from the West, from Europe, and from Asia. Fed Chairman Jerome Powell said one thing, that there is uncertainty, and one thing that investors do not really like is uncertainties in the stock market, which makes the entire market very volatile. So in today's video, I'm gonna tell you how you can go ahead and maneuver yourself throughout this crisis and be successful at the very end of it. And for this, you have to understand every single aspect of it, starting with the geography. Well, Iran is literally at the center of the world, and lying next to it is the Persian Gulf and the Gulf of Oman. And there is this tiny strait of water, which is also called as the Strait of Hormuz. And as of this moment, Iran has closed this small strait, which entails that energy flowing from countries like Iraq, Kuwait, Saudi, UAE has stopped flowing and going to different parts of the world. And since there is a crisis, the crude oil prices have gone up. And many of these countries have even shut down their refineries because of the retaliation from the Iran side, because Iran has already taken out a lot of refineries, which is currently up in flames. And as I'm recording this video, crude oil prices are touching $100 per barrel. And if I pulled up the chart for the last 10 years, when crude oil prices have gone all the way up, is only during crisis. And if you see right now, this is something that the market doesn't like. S&P 500 as of today closed at 6,600. And there's a high chance that it might even go lower if crude prices stay up like this. Having higher crude oil prices means energy becomes very expensive. Now, when there's so much volatility, crude oil prices going up, the first sector that gets affected is AI. When everyone is talking about the AI boom, this is one of the sectors that gets the maximum impact. Because to run these data servers that takes care of the AI, it requires energy. And since the shutdown of the Qatar's refinery, the world's largest LNG exporter, 33% of the global helium supply is stopped, as helium is a byproduct of natural gas processing. Because helium is essential for semiconductor manufacturing, MRI machines, fiber optics, and space exploration. With no viable substitutes, meaning higher helium prices will directly raise the costs of making every chip in the world higher, and the future costs of laying down these infrastructures to maintain these servers. So in short, AI takes the first hit, which is the major brunt of it. While AI takes a hit, there are different sectors that actually benefits from it. We're talking about like defense stock such as Lockheed Martin, Raytheon Technologies, Northrop Grumman. Well, basically, if you know, during this crisis, every single side is playing with missiles. And then you got to replenish those missiles. And who benefits the most out of it? The US. When we talk about these defense companies that manufactures these products, well, they benefit the first out of these crises. If you look at the stocks and the prices in the last 5 years, you can see that they have already started giving a rally at the start of the crisis at Venezuela, at the start of this year. This is Raytheon. Let's jump to Northrop Grumman. Over here, it also shows the same story, that the stock market has priced in that there is going to be crisis, and during crisis, that these companies is definitely going to do better. Let's take a look at Lockheed Martin. If you can see, these stocks have done well. Now, if you think that I will benefit a lot if I enter right now, there's a big crisis going on, well, that's not actually how it works. Well, investors like you, like me, have already factored these things in, and it has already given a rally. And if you see and look at the history, that these stocks definitely do correct. And when the correction happens, you don't want to buy at the top and sell at the very bottom. Well, these stocks are a good bet for the investors that are already invested into the market and not making new positions. And if you see the rallies of all of these stocks, there's one thing in common. The rally when there is a crisis in Venezuela, now there is a crisis in Iran, and guess what is going to be the next crisis? We're talking about Cuba. Everybody knows that Trump is talking about Cuba every single day. What does Cuba entail for the US? First thing, they can throw away the communist ideology amongst the people over the last 40 years. Secondly, they have a strategic geographical interest in that region. Being there, you are able to control the narrative and how things are shaping up in that region. And lastly, the most important thing, an economic pressure since they have blocked all oil shipments. But let me tell you something, the impact of this Iran war will have a long-lasting effect on the market. Starting with the major pointer, which is high inflation. As Fed Chairman Jerome Powell just confirmed that Trump is leading the party where gas prices are already $1 up. And since we already know that the crude prices are up, things are about to get worse. And most importantly, the Strait of Hormuz still being closed, things are about to get even worse. And when there's a shortage of energy, prices of every single commodity, like groceries, day-to-day things, the prices will go up. But here comes a twist. Now, since US has taken over Venezuela, US was and still will be the biggest oil producer in the entire world. And guess what the US has done right now? They have partnered up with Reliance Industries from India to boost oil production in Texas. And that is the master move. Well, this will lead to temporary prices going up, but then the US doesn't have capabilities to increase oil production in the next week or so. It would require infrastructure to do that, and that would take weeks or even years. Now, the second thing what it impacts is the price of gold. What should you do? Should you hedge your positions with buying gold at this point? Well, for me, I'm not making new positions in buying more gold. If you already have positions, then it's a good thing. Because if history doesn't lie, back in the Iran war, back in 1970s, you would know that the gold price actually crashed during that crisis. And we're seeing something similar that I have seen over here, which might be repeating. And as we all know, gold prices currently are at all-time highs. Making new positions might let you hold a bag for a long time for the prices to recover in the long run. Or maybe it might make all-time highs. Over here, no one knows what's gonna happen tomorrow. The situation in the Middle East is pretty volatile. And the US has already confirmed that they have already taken care of this crisis. And with the price of gold, what I feel it's already priced into the market. Do I have positions in paper gold, in gold ETFs? The answer is yes. Am I making new positions? No, I'm not. If you want to see what I'm doing with my portfolio, then check out financewithbera.com. Over there, you can see my live portfolio, what are the moves I'm making, and how I'm steering myself away from danger, taking a conservative route to make returns consistently. Now, the next thing that gets affected is the effect on US dollars. Currently, Trump is trying to offset all the national debt through Bitcoin. I mean, everyone knows it. But here's the thing. People and investors want security at these times. They're pulling money away from new world emerging markets such as Brazil, India. They're pulling their money away into more secure instruments such as US treasuries or bonds where they get a guaranteed return. Even though the government is trying to devalue dollars, it's actually gaining strength bit by bit. And if you see currently over here, this is an exchange rate from one of the emerging big economies, India versus the US. The US dollars versus the Indian rupee. And if you see right over here, in just over a year, it has already gained almost 10%. So why would investors take a risk in an emerging market when they know they are getting a guaranteed return in their own soil? Thus, the US dollars are actually gaining more momentum and getting more value. About me personally, I am actually diversifying. Basically into the Japanese market. What I'm following is what Mr. Warren Buffett has done for Berkshire Hathaway. They've made new positions in Mitsubishi and few other companies in Berkshire Hathaway, hedging their positions with the Japanese yen, which is much more stable during these uncertain times. So basically, to widen your scope of investment and not just putting every single egg in just one basket. That's the main mantra right now, and that's what I'm following over here in my community. Now, the most important thing that you guys are here for is the long-term impact on the stock market, what it means for all the investors and what we should do during these tough times. So basically, as I was saying, to be invested through different asset classes, have some real estate, have some money in the US market, have some money in emerging economies, have some money in the European market, have some money in the Japanese market. In that way, you're able to go ahead and hedge your position during these tough times. And that's exactly what I'm doing, what Warren Buffett would do. Be greedy when others are scared. So basically, I am actually making positions in different markets. Recently, I purchased VUAA, where I don't even have to think about like reinvesting my dividends, where it basically invests into the US market. If you clearly see, this is VOO. In the last 5 years, it gave a return of 70%. But on the contrary, if I go over to VUAA in the last 5 years, it has given me a return of 80%. Over here, I didn't have to worry about like reinvesting my dividends, but it just does it for me. It's a low expense ratio fund, and I'm maneuvering my way throughout this crisis. And you can do it too. You can follow my exact portfolio, which is live at Finance with Bera. Over here, you can track every single move that I make in the market and maneuver my way to get more lucrative returns. The best piece of advice would be to going back to your basic. Having an emergency fund is the most important thing right now. You never know if you're going to lose your job, if there's going to be a crisis in the family. You need to be prepared for what's to come. So creating an emergency fund, such as starting with $1,000, moving up to $5,000, would guarantee the safety for you and your family during tough times. Secondly, you can always park your money in a good savings account with good returns. You can either go for the fixed deposit route where you get a better return, or having savings account which just gives you free money for your money just by staying over there. So you can opt for that. Thirdly, it's your age. If you're someone who is young, who can invest in different asset classes and can take risks and volatility for the years to come, it's advice for them to go ahead and do that. Now, for someone who is approaching their late 50s, they cannot take risks because they're soon going to be retiring, or probably semi-retired, or already retired. What I would always look at is the point of safety. Real estate, having rental units, or having treasury bonds is going to guarantee me fixed income. Even at that age, if I'm not working, my money actually works for me. But the return might not be as good as what would be guaranteed in the stock market, but it's rest assured that it's definitely going to be no losses at your part. So being diversified during these tough times is definitely going to make you the winner. And if you want to know about me, I've actually made a dividend portfolio, which pays me for just doing nothing. If you want to check that out, do check out this video on the screen right now. And there are more ETFs and index funds that I'm actually buying right now. And for that, check out Finance with Bera. And I'll meet you over there.